The UK housing market has just been shaken to its core. December 2025 brought a rate hike that changed everything, from buyer demand to mortgage pressure, and the consequences are hitting households faster than anyone expected. If you want to understand what really shifted after this latest interest rate rise, this is the update you cannot afford to miss. Welcome to UK Property Authority, the channel where UK real estate meets real news. Every week, we expose the market's biggest shifts from housing prices to mortgage shocks, so you can make smarter moves. Let's get straight into today's update. The story really begins with the Bank of England's decision to increase interest rates once again, adding another 0.25% to the base rate. While small on paper, the impact on everyday households has been anything but small. For millions of people on variable mortgages, this immediately translated into higher monthly payments. Combined with previous rate increases over the last 2 years, many families are now paying hundreds more per month than they did back in 2022. For some, the increase is manageable. For others, it's the final straw in a year already filled with rising bills, stubborn inflation, and stretched budgets. This rate hike has created a ripple effect throughout the housing sector. But there's more beneath the surface. December has seen a noticeable rise in property listings as homeowners who are under financial pressure decide to sell before the market cools more deeply. This increase in supply has shifted the power dynamic between buyers and sellers. For the first time in years, buyers are slowly regaining leverage. Price reductions, incentives, and flexible negotiations are becoming more common, especially outside London and the southeast. Yet London itself remains complicated. Prime and ultra-prime areas continue to show resilience, largely due to international buyers and cash-heavy investors. But middle-tier suburbs and commuter zones have not been so lucky. These areas have seen small but consistent price dips as rising mortgage costs push households to reconsider whether they can truly afford their current lifestyle. Some families are downsizing, others are relocating to more affordable regions, and a growing number are transitioning back into renting, despite the rental crisis continuing across the country. The rental market is perhaps one of the biggest points of pressure this month. Vacancy rates remain low and rental inflation continues to rise. December brought stories from across the UK of renters facing stiff competition, with dozens of applicants for a single flat. Landlords, dealing with higher interest costs themselves, have passed these increases onto tenants wherever possible. Renters who once dreamed of buying a home are finding themselves trapped, unable to save enough for a deposit while rent consumes the majority of their income. For potential buyers, December 2025 brings both opportunity and challenge. On one hand, falling demand and rising supply create room for negotiation. Homes are staying on the market for longer periods, an average of 54 days compared to just 21 days 2 years ago. On the other hand, affordability is the biggest barrier. Even though asking prices are softening, mortgage rates remain high and borrowing capacity remains low, meaning many people simply cannot stretch to the price points they once could. This has reshaped buyer behavior significantly. Smaller homes, flats, and commuter belt properties have become more appealing. People are expanding their search radius, moving beyond major cities, and exploring rural or semi-rural regions where their money goes further. Many first-time buyers are also delaying their plans entirely, hoping that rates will fall in 2026 and improve affordability. And then there's the investor market. Buy-to-let investors, once a dominant force in the UK housing industry, are now divided. Some see opportunity in rising rental demand. Others, however, are feeling the financial squeeze as higher mortgage payments erode their profits. December has seen an uptick in landlords listing their properties for sale, especially those who entered the market within the last 5 years. But long-term investors with established portfolios are holding firm, believing that rental shortages will continue supporting strong rental income into 2026. Construction is another key area where changes have become extremely visible. Developers have slowed down new projects due to rising labor and material costs, but also because high interest rates make financing large developments more difficult. Many planned housing schemes have been delayed or cancelled, creating a worrying outlook for future supply. Experts warn that if construction levels remain this low, the UK could face a deeper housing shortage in the years to come, potentially driving prices back up once rates fall. Consumer sentiment has shifted dramatically as well. December is traditionally a reflective month, and families across the country are sitting at their dinner tables discussing what the new year might bring. Will rates fall? Will the cost of living crisis ease? Will wages catch up with inflation? These questions linger heavily as uncertainty clouds the market. Many people simply don't want to take financial risks right now. They're pausing big decisions, saving more, and waiting for clearer signals before stepping forward. Yet the market is not collapsing. Instead, it's recalibrating. After years of rapid price growth, cheap borrowing, and frenzied buying, the UK is now witnessing a cooling phase 1 that may ultimately create a more balanced and sustainable market. Prices are dipping slightly, but not crashing. Buyers are gaining negotiating power, but still facing affordability barriers. Sellers are adjusting expectations, but still finding interest in good quality homes. One of the biggest changes this month has been the return of realism. Buyers are no longer dreaming beyond their budgets. Sellers are no longer expecting £50,000 over asking price. And lenders are no longer handing out high-risk mortgages. The market is slowly but steadily stabilizing, even if that stability feels painful for many households. Looking forward, economists are split on what 2026 will bring. Some believe this December rate hike may be the last one in the cycle, predicting that the Bank of England will shift toward rate cuts by late 2026 as inflation settles and the economy cools further. If this happens, buyer confidence could return, borrowing power could increase, and the market might see renewed activity. Others, however, warn that inflation could resurface unexpectedly, forcing further tightening and prolonging the affordability crisis. Regardless of these predictions, one thing is certain: the UK housing market remains deeply rooted in long-term demand. The country's population continues to grow, driven by domestic trends and migration. Urbanization continues to influence housing choices, with people preferring cities and well-connected towns. And despite the rise in remote work, location still matters. Transport links, schools, job hubs, and community infrastructure remain major drivers of demand. As December 2025 closes, the housing market stands at a crossroads. The interest rate hike has triggered a shift that will echo into 2026, reshaping buying behavior, investor strategies, and household decisions everywhere. But change, while uncomfortable, also brings opportunity. Those who adapt quickly, buyers who negotiate strongly, sellers who price realistically, investors who plan strategically, may find that this period of transition opens unexpected doors. The next few months will be crucial. Winter tends to slow the market, but early 2026 will reveal whether December's shift becomes a long-term trend or a temporary adjustment. One thing is clear though: the days of easy borrowing are over, and the UK has entered a new era of property realism. Whether you're trying to buy, sell, invest, or simply understand what lies ahead, this December update is the wake-up call the nation needed. Thanks for watching UK Property Authority. If the video helped you, hit like and comment your thoughts below. Don't forget to subscribe and turn on notifications so you never miss a major UK property update. See you in the next one, your authority on the UK real estate market.